Good afternoon, everyone, and welcome to Stock Market Today. It's Allie Corman, Ed Carson here with a breakdown of the action in today's session, where we did see a bit of a bounce, but Ed, we've seen a lot of damage in the last couple of weeks.
Yeah, a lot of damage in the last couple of weeks, and it wasn't the most inspiring balance ultimately. But we're going to take a look at a few stocks that are holding up reasonably well, at least something to watch: Merck, Louisiana-Pacific, and Anthem.
All right, some watch list names there, but first let's take a look at the major indexes. The NASDAQ today up about 1%. We had the S&P 500 up about 0.25% by sessions close, but it was a mixed day. The Dow down about 0.25%, and the Russell 2000 down about 0.2%. But technology, the hardest hit area, looks like, with the NASDAQ leading, that is where we were seeing a lot of the bounces, Ed.
Yeah, that's where we got the bounce and needed it most. The market, you could argue, was due for some kind of bounce. And we opened strongly. Maybe if you could just show the intraday just for a moment, just to give people an idea of how today's action was. Opened up strongly, went to negative fairly quickly, like within an hour and a half or so, then rallied again, and then sort of faded again, sort of before maybe just the last second or so boost. But so it was an up and down action. This is nice, but even if we had closed at session highs, we're a long way down. Yeah, there's the week. I mean, we're way down. We need a lot more than just 1 day or 2 days. We need to see some real strength powering higher, and we're just day one on a rally attempt now on the NASDAQ and S&P, and it wouldn't take much of anything to see us go back down.
Right. We are below that key 12,000 level for the NASDAQ still. So even though it seems like we are kind of in an oversold type of environment, trying to call the bottom or, get in early before an official follow through day is a very dangerous game to play, because in these kinds of markets, you will often see some gyrations. It's not all red. There is big green between the big red a lot.
Yeah, can you see last week? Last week we rallied 3 days in a row. Can you see that on that weekly chart? No, you can't. I mean, you can, but if you really were parsing it, but yeah, we rallied initially, but then we ended up going down. It was a horrible week ultimately. So you can have a good day or two or even three. What we want to see is a real sustain, because you can't make money in a 1 day rally and a 3 day rally, certainly not sustain that. So we need to see a lot more than what we saw today.
Yeah, and even if you do hear big name investors starting to buy again or calling for a bottom, we shouldn't be distracted by those sorts of headlines, and that's where the technical analysis, but also the rules, come into play, Ed.
Yeah, I mean, you just the rules. It's like the market. This is why we have these rules, so you don't let the emotions get into it. Oh wow, it's moving where the market's bouncing. Here we go. This well-known investor is buying. Here we go. Obviously, we must be going up. And then it can fade away very quickly. Yeah, follow the rules. Just look at these technical analysis and just try to be as dispassionate about it as possible. Not easy.
Yeah. Well said there, Ed. Okay, well, let's also just take a quick look at the other major indexes. So here is the S&P 500 battling for support right around that 4,000 level, closed above it by just a point here today, Ed. And we also can take a look at the Dow trying to hold above 32,000, which it did today, and IWM, which tracks small caps, continuing to bleed here. So this week at its lowest levels, really round tripping. We're seeing lots of round trips back to pandemic kind of breakouts, and now seeing that for the Russell 2000.
Yeah, and we've seen that with so many stocks that have round tripped or done far, far, far worse.
Yeah.
This is why we have the sell rules.
Okay, and taking a look at the 10-year Treasury yield, DRT index on MarketSmith, coming off today by a bit, but still right around that 10-day moving average.
Yeah, it's really moving higher. I mean, tomorrow we're going to get the consumer price index. It should show that inflation has fallen a little bit in April versus March. I mean, it's still going to be very, very high. It'll be interesting to see how the market reacts to that. We'll probably need a bunch of those reports before the Fed says we're going to slow down. They have a lot of reasons to. But, the 10-year yield is, it's still an aggressive growth uptrend right now. And, that's been weighing on the markets.
And yes, all eyes now turn to that key inflation data, which we will be at the ready to interpret and digest for everyone. And now let's take a look at some stocks. So Merck, MRK, medical sector name that is hanging in there. Some relatively tight trading action. It did close off of its highs today, up just fractionally. But to find a stock that is right around its 10-day moving average, not even coming down to its 21-day, it's pretty impressive.
Yeah, nice action, tight action. And I mean, so many chart looks terrible. And the left side of this chart doesn't look the best, I'll admit. But generally, I mean, it's only a 22% deep base. It's, certainly on the right-hand side, it's been acting well. Even if this were a good market, you'd be saying, hey, this doesn't look so, this looks pretty good. So, we tried to move today, came back, but that's not the worst thing. It'd be great if it sort of held steady, and then when the market was ready to really move, then it powered out. But RS line is right at highs. It's really hard to fault what's been going on. This area, there is an area of strength. Some of these traditional drug giants are doing pretty well. I mean, there's not a lot of leaders out there that are sort of hanging on. This is one of them, one of the closest, nicest looking charts that you'll find right now.
It is. So definitely worthy of a watch list. And taking a look at a monthly, I guess this is the trouble now, Ed. If it's medical names that have historically been laggards, or defensive stocks that don't really tend to outperform the market on the long run either. That's what's popping up on our screens right now. Are those really going to be the ones to lead the market in its next leg higher, if and when we do get that follow through day?
That's a good question. I mean, these may do all right. These may not be the ultimate huge winners. It's hard to know. There's not much setting up. So you think about what are the growth leaders? Well, they all look terrible, really, honestly. So that's an issue. Certainly, like when you look at some of these food producers, you go, really, are those the ones that's really going to lead if the market powers higher? But this is what's setting up, and yeah, that is a good point. It's very unclear what will lead when we actually do get a nice follow through.
But undeniable to see that relative strength here. I mean, when you have a relative strength line that is at that angle, I mean, maybe it's not outperforming over the long run, but over the last couple of months, it definitely has. And now let's take a look at Louisiana-Pacific, LPX. 2 strong days of gains recently, and now pulling back, forming a little bit of a handle.
Yeah, it needs one more day to be a handle. Been pretty good action here the last few days, closed pretty tightly. On the earnings day, yeah, it's going to create a handle after day. There might be some kind of trend line there. On the earnings day, it gapped up, and yeah, if you were really brave, you could have bought that, and then it followed on. It kept on working. I mean, a lot of gap ups have fallen back because the market falls back. This one's given up some of those gains in the second day gains, but actually pretty nice. This sector, really strong earnings growth. Lumber prices are coming up. This group is coming up quite a bit. There's some other names that are in there. There's also some building materials names. Right. So it's a little pocket of strength. I mean, again, could this all fall apart quickly? I mean, sure. I mean, that's the kind of market it is, where things look strong, they look strong, and then they break. But this is one I think that investors should definitely be watching. The RS line has been powering to new highs and staying there as it's pulled back modestly.
Exactly. And you're right. It's not alone. It's not a lone wolf here. And it's got that RS line blue dot. So one to keep tabs on, no doubt. And let's also take a look at Anthem, ANTM there, typing too fast, pulling back right around its 50-day line / 10 weeks. So going on over to the weekly chart. This is a key week for Anthem because it's about 1.3% below the 10-week line. So if we see it's at a crossroads, either it breaks down more, that's a sell signal for those who bought out of the last base, but if it can bounce from here, that might be an opportunity to either add to an existing position or potentially, depends on what the market's doing, start a new position.
Yeah, this is definitely one of those we looked at Dollar Tree on Friday, and that was our stock of the day. We had a very similar look, but it's right. Anthem here is right at the top of a buy zone from the prior breakout. So if it's a decisive break, it's going to be close to or will round trip, a pretty solid gain. And that would be a strong sell signal in and of itself, let alone the 10-week line. Yeah, and as it powers higher, it could be a buy signal. Or sometimes that's why there's these pivotal moments where it could be either way. This is why it's so important, because it's pulling back. Will it find support? Will it do that? We don't know, and it's tougher in this kind of market. In hindsight, this might look great. Of course, it was holding up so well. Look at that relative strength line. But we've seen others in the group like United Health, which was also looking good. Again, not looking terrible. The RS line is holding up, but this one has fallen back. This one has round tripped. This one has gone through there. So, this is a case where, yeah, I mean, maybe it'll bounce back in an uptrend, but you would have wanted to get out of this one. So there is weakness in here, even though there's some strength in the medical services space. A lot of things that you want to watch for, but yeah, very important stretch right here.
Right, and taking a quick look at the monthly chart for Anthem, it has had periods where it does outperform the market. The earnings stability pretty good in the single digits. This is one ranking where the lower the number, the better. But bringing back UNH here briefly, similar stability and growth rates for earnings. If you take a look at the monthly chart here, a little bit more outperformance in the group. We have a subscriber who said, hey, I've been in this since, I forget, it was 2017 or 2018. What do I do with it? Because yeah, if you look at the daily chart, it is below that 50-day line. But I mean, if you've been holding this since 2017, seems like, Ed, for those kinds of stocks, you can then look at the monthly chart, some longer term moving averages, a trend in the relative strength line too, as sort of your guides to keep you in a big long-term multi-year winner.
Yeah, I mean, if you held this through 2019,
right.
2020, but yeah, there's the 40-week line, there's the relative strength line is at new highs. It's not close to rolling over. That would be more the kind of thing to be worrying about. This is basically a long-term leader. There was political issues that got it, for a few years in conjunction with the COVID crisis. Right. But there's a lot of reasons why United Health and some of these health insurers, solid growth, stable growth. There's a lot of reasons to like these names. Not just, they're defensive, but they're not, they still have growth. So definitely a sector to watch for, but Anthem is right now the leader in the group.
It surely is. So we'll have to see if we can find support at the 10-week and maybe UNH here will build a base, but we'll have to see. Thank you, Ed, for breaking all of that down for us and for everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So we hope you join us. Investors.com/IBD Live for all the details on that. And this Friday, a couple of things headed at you. We have Matt Caruso of Caruso Insights joining us back on IBD Live. It'll be great to hear from him, to talk to him about how he's handled all of the energy stocks, whether it's the oil and gas names, also coal stocks he's been taking a look at. But we'll have to see what's on his watch list now as the market has deteriorated over the last number of weeks here. And also Friday, we have Justin and myself coming up on Barron's Live, barrons.com/live for all the details. And since it's Friday the 13th, we have a little bit of a myths and superstition kind of theme that we're going to be taking a look at, which will be fun. So we hope you join us for that. That is happening at noon Eastern on Barron's Live. Thanks so much, everyone. We will see you right back here tomorrow.